Is it a good time to be buying Bitcoin? Should people be saving in Bitcoin? How do we wrap this up and put a bow tie into this for the people out there?
Absolutely. And a fantastic question, Oppie. Fantastic. So actually what I'm going to ask you to do is I've been creating what I call rabbit holes. You'll notice in my tweets, you might end up 6 or 7 pages deep because I keep quote tweeting on top of quote tweets to help you get down the rabbit hole. So go ahead and click that quote tweet there and then scroll down to the bottom of that one. And now click that one. There we go. Okay. This is what we were talking about with cost structures, right? There's only one question you need to be answered to be a successful investor. And that is what I'm buying cheap? So in this case scenario, is Bitcoin cheap? Well, it's a simple rule. You buy X when it's cheap, you sell it when it's expensive. So how do you know how to answer this question? My strategy is to take the producer's cost of production, right? So if I'm looking at real estate and I know that this is a beautiful single family home, 4,500 square feet, awesome piece of land. And what it's going to cost $2 million to replace this home, right? So there's no way, even if you had all the connections, you had a developer, you had contractors, you can't build this house for less than $2 million. So if the price of the house was less than $2 million, I would buy it without hesitation because the price is below the cost. The price is below in real estate, what they call the replacement costs. With Bitcoin, we call it the cost of production. Satoshi, or I call it the cost of production. Satoshi actually called it the cost of generating. So the cost of generating Bitcoin is your baseline. We need to know how much does it cost to generate a Bitcoin? Because once you understand that, you go back to business 101. The miners can't sell you the Bitcoin for less than it costs you them to generate it. They'll go out of business. And if you believe in the value proposition of Bitcoin, if you believe that sovereign truth money is a valuable proposition to your life, well, then you're going to pay above the cost because you have to. And if you don't, well, the economic consequences will hit you. So what you see here in this chart is the red place, that red, what I call a price cloud, right? And the top of the price cloud is the all-in cost of production. This is based on an average, and this is based on worldwide. So, there's probably a few institutional miners who are not paying these prices. And this is an older chart. So what I want to show you through this chart before we go back to the other one, Opti, is what is the commodity cycle, right? Bitcoin is commoditized energy in the form of money, and price discovery is a commodity cycle. So when the price is at the top of the red cloud, which is the average all-in cost of production, that's called fair value. You can see that marked in orange. When price goes to a discount to the all-in cost of production, it's like when that company sends you a coupon. You can buy it for less. You can buy it for cheaper. It's when you want to buy, when the price is in the red cloud because it's less than the all-in average cost of production. That's your discount zone. So you want to buy Bitcoin when it's cheap in its discount zone. And when it's at fair value, yeah, you can continue to stack. You're getting a fair deal. But what happens when the price goes way above the red cloud? It goes into what's called a price premium, right? So now imagine that $2 million house isn't for sale for 1.8. It's not below cost. It's not below replay. It's not a good deal anymore. It's not cheap. It's expensive because now it's listed for $4 million. It's twice the amount of the replacement cost. So what you'll see is price goes from premium to fair value to discount, back to fair value to premium to fair value to discount. And it's a cycle. That is the Bitcoin commodity cycle. Now, one thing I want to point out here, look what happened there in the bear market of 2018. You see how price went down into the red cloud there in 2018? It was at a discount. It was super cheap. Price was in the red cloud. And then look what happened during COVID. Price was kind of right above the cloud. And you know why it was at fair value? Because look what the halving did. That black line is the halving. Look what happened to the price cloud because of the halving. The halving is the catalyst to a new price discovery cycle because the cost for miners double overnight. You could see the cloud, it doubled overnight because the rewards go down minus 50%. And that translates to a doubling of cost. Well, where did price go? It went right back to where it needed to be, right back where the miners needed it to be in business, right? Because you can't buy it. You can't sell it for less than it costs you. You go out of business. So that's now go back to the original tweet you're in. So people understand the commodity cycle. because here's where we are today. Now you can make that chart bigger because this is boom right there. Look where price is, guys. Where's price? Is price above the price cloud? No, price is in the price cloud. Bitcoin is as cheap today as it was during the 2018 bear market. Bitcoin is as cheap today as it was during the 2020 liquidity crisis. Bitcoin is cheap, cheap, cheap today relative to its cost of production. And if you know what's happening with hash rate is going parabolic. We talked about it between the comparison between Bitcoin and gold. When hash rate price drives hash rate drives difficulty drives cost increases the floor price. This is the store of value mechanism that was engineered into Bitcoin. And what you're seeing with that red price floor growing, notice what happened after the China mining ban right there in the first big fall from that 65,000 peak. Where did the price come back down to? It came down to fair value because the miners had to sell everything they could to relocate. But did they sell at a loss? Hell no. They sold down to fair value. And then what happened when they stopped selling? Price went right back up to large premiums. And then the Federal Reserve announced their interest rate hikes. Where did it come back down to? Fair value, because we didn't know if they were bluffing or not. Then in March, when they finally started raising the interest rates there at the end of March, where did it go? It went to discount range. We entered the bear market for real when they really started raising interest rates. BTC is a commodity. It's commoditized energy in the form of money, and its price discovery cycle is a commodity cycle. Right now, we are at the point of maximum opportunity. Price is in the discount zone. Price is in the range where you want to buy it because it's cheap relative to its cost. Very soon, that is going to move up. And actually, the bottom of that price cloud is about $22,000. So in April, when the halving hits, guess what happens? The bottom of the price cloud doubles. It's going to go to $44,000. So right now, if you have the ability to make a bet on what the price of Bitcoin is going to be by the halving, well, maybe it'd be a good idea to say the price is going to be around $44,000, because if it's not, the miners are going to be in a lot of trouble, right? This worked for me perfectly during the 2020 halving, and it's going to work perfectly here because it's a natural law of economics. I expect price to be at $44,000 minimum going into the April halving, because that's where price needs to be. Just like you can see there, we had the coronavirus crisis, it went down into the cloud, it bounced up violently to be at the bottom of the cloud for the halving. Well, price can be anywhere within the cloud at the time of the halving. The top of this cloud is around $36,000. So it's a bit of a spread there, but historically price starts out at the bottom of the cloud, works its way up, trying to break out of fair value. And notice what it did. It took about 4 to 6 months after the 2020 halving. People were trying to figure out what's going on here. What's taking so long? We had to get out of the fair value range. The accumulation, once that stopped, look what happened to price. It went parabolic to premiums. Who sold into those premiums? The miners. Where'd they sell it down to? Fair value. When they stopped selling, what happened? Premiums. Who sold into it? Probably macro, probably miners as well. When they started raising interest rates, where did we go? Discount. When the halving happens in April, the cost of production on the electric side, on the bottom of the price cloud, will be at least $44,000. That's where price is going to be minimum in order for miners to maintain their business model, and in order for people to believe the value proposition of Bitcoin. If you want to benefit from the value proposition of Bitcoin after the April 2024 halving, it's going to cost you at least $44,000, because no miner in their right mind, maybe there's a few dumb ones out there, but nobody in their right mind is going to sell you it for less than it costs to produce. And the best of the best are going to be at the bottom of the price cloud, whereas the retail is more towards the top of the price cloud. But right now, Bitcoin is cheap. So don't use psychological price points like 40,000, 50,000, 60,000 to determine whether or not Bitcoin is cheap or not. You have to form a baseline, and that baseline is the cost. And you look at the market price relative to the cost. Bitcoin is cheap. Buy as much Bitcoin as you can when it's cheap, because premiums will come. That's part of the commodity cycle.